January 27th, this is Dave Dispinet with the Stock Playbook. Dow Jones was down 74 points, 0.5%. NASDAQ Composite, a little more tech companies, which did very well today, up 11 points, 0.4%. S&P 500 down 2 points, 0.1%. Looks like we're stalling up here. Who knows what the catalyst could be, up or down? I know this. We've had one heck of a run since September's bottom or November's bottom. So I think you need to start taking some profits off the table. Book some profits. This still continues until proven differently to be a trader's market. You know, we can't just buy and blindly hold. There's way too much headline risk out there, whether it be Europe, our own debt crisis, Iran. So whatever you got, if you're making some money, just trim a little bit. I'm not saying sell everything and go short. You know, I'm just saying take a little bit off the table. Ubiquity Networks, looking at our focus list. Let's look at some of our focus list stocks. Ubiquity Networks pulled back to that 19.5, 20 level. Gave us the perfect entry we were looking for. If you jumped in at 19.5, 20, you now got 11, 12, 13%. Sell a little bit. If we break out, you can hold the rest and ride it. But this stock's been sloppy since the day we started buying it. Transocean, RIG. Here's another one that we've just had a phenomenal run. After Christmas, this thing sold off for 4 days. It held that 38 level. We said we liked it going into, a ruling regarding the BP disaster, and they got exonerated yesterday. We now have a 26% gain in a month. You got to take some off the table, if not the whole thing. Just because the judge exonerated them doesn't mean the EPA isn't going to slap them with a fine. So take some off the table. You want to hold on to the rest. As I said last night, I think rig could go much higher, but there's nothing wrong with taking a little bit off the table. Fusion IO, one of our favorite long-term investments. Storage memory platform for data decentralization, enabling customers to improve processing. Sold off after what I thought was a great earnings quarter. They still holding that low from the sell-off. Great opportunity to get long as an investment here. You use a close under 24 as your stop level. We continue to hold it. I still have the upside calls that I plan on holding on to. SodaStream, speaking of calls, pulled back today. We said yesterday it's pulling back. Let's see if it comes in towards, that 35 level. It got down to 35.20. Today, I bought the April 32.5 calls. I paid $5.70 for them. They closed at 7.30. They're up 30% in a day. I still have the stock, but I added some calls to the position because I don't want to go throwing more money into a market that's run like this, but I continue to like SodaStream. Heckman, HEK, a speculative stock of ours, held that $5 level. Here's the pullback. I don't like the fact that it closed at the lower end of the range and heavy volume. We're probably going to take out this $5 low. But if you're looking for an entry, you get long down here on this pullback, and if it fails, give it a quarter. Give it a dime, whatever you need to give it. See if you could catch a reversal in this. Heckman continues to be a good long-term stock under 10 play. We'll get to a couple other stock under 10s once we finish these focus list stocks. Francesca Holdings, women's apparel boutique stores. They're in 38 states. They're going regional to national. I like the long-term growth of this company. You could see solid revenue growth, good earnings projections. It's been a successful IPO, building a base. Now coming up, broke out 2 days ago. We talked about how strong it looked. Today we pulled back. They priced their follow-on offering at 23. That's why you had the huge volume today. Nothing to be concerned with unless we start taking out, these lows at 21, 22. Then you might go ahead and take the small manageable loss. You want to take small manageable losses and not just blindly throw caution into the wind. Robbins and Meyer, oil and gas, machinery and equipment. They shook the tree. Last week we said let's watch it for a day or two. It found support at the 200-day moving average, giving us a great opportunity to get in there at 45. But I got 2 emails on us today. What should I do about Robbins and Meyer and take the profits? No, you don't take a $2 profit. That's 4%, 5%. If you're taking 4% profits, you got to be willing to cut your losses at 1%, and that's really difficult. If you were willing to risk $2 to the downside, you're looking to make 5, 6, 7 to the upside from a trading standpoint. Broad Vision. You're welcome. I got the emails today. We nailed this one perfect. Not just on the long side from 20 to 40, but then we shorted it and we made money on the downside. And then yesterday, our playbook was simple. We said if it comes back towards 20, we think there's a bounce in there. It dropped down to 20 cents to the penny. Looking at the intraday, how did I play it? Here's the intraday. Gap down on the earnings, okay? I didn't realize I had other positions going, but after I saw this run, I was like, oh, I missed my trade. I kept it on my radar. It started pulling back. It was on this pullback that I got long right in here at about $20.70. 20.70 I got long. I used the $20 stop as my loss, and then I got a nice run. And when I got my run, it just so happens that for whatever reason, I picked $3 as a nice even number. It's 15%. We got it. I put my limit order in. I got hit at 23.70 right on this bar. I made 15%. I held it for 3 hours. Now I'm done for it. I still think you can continue trading this stock, but the easy money, both up with a 100% move and down with this huge pullback has been made. Now we want to see how it acts at that 2019. I'm looking at the 20-day moving average. If we get a pullback, maybe I'll give it a shot again. Invensense, again, another one that we've talked about when it was consolidating in this 9.5, 10 range. We had a beautiful run. We said take a little profits if you'd like, but you can hold on to it. They pulled back. We had it on our radar for an earnings play. We said let it pull back towards the 13 level. If it does, you get long. It did that yesterday. I bought the February 12.5 calls for $1.70 yesterday. They closed today at $2.30, up 35%. I'm still holding on to them. Couple other earnings plays that pulled back today. Green Dot. The earnings trade, we had a nice run into earnings. Now, the earnings play's over. Now you look at it from an investment standpoint. On this pullback, heavy volume closed at the lower end of the range. This line right here is the line in the sand. 27.29 was the low. Call it 27.25. You get a pullback towards that 28 level, you get long, or 27.5 to 28. A close under 27 and you're out. I like Green Dot as an investment. General purpose, reloadable, prepaid debit cards for all the underbanked here. They got 55,000 locations. Green Dot's one I like a lot. Riverbed, RVBD. This is a name we've owned in the past, made a lot of money on it. Missed, sold off. It closed at the upper end of its range. That's a sign of some support. So now I would use this 22 level. If you get a pullback on Monday, Tuesday, towards the lower end of today's range, 22 and change, you get long. You use the 22 level as your stop loss level. I like Riverbed. Google, we called it yesterday. Pulling back to the 200-day moving average, giving us a great opportunity to get long. Use 560 as the stop loss level today. We get a nice 12-point move higher. You just trail this, and you hope it gives a nice bounce and close this gap. But Google is a name we continue to like as an investment. From the levels, and as a trade, I think you could still see this thing go up another 20 points from here. Intuitive Surgical, we had the same thing. Earnings gap down. We got long because they had a great report, so we didn't wait for a day or two to sift it. We bought the dip. You just continue to ride it. Now you raise your stop loss levels to break even. You don't let a winning trade turn into a loser. A couple of our earnings plays that we hit that continue to work. Arctic Cat added to its advance from yesterday. Under Armour, which we said, they shook the tree, but hold on to it, snapped right back today. Delphi Automotive, DLPH, it went ahead and continued going ballistic, hitting new highs. If you're in it, you enjoy the ride. If you're not, you just let it go. You don't go chasing it. A couple of earnings plays for next week. Baidu. Okay, they're not confirmed but projected to come on Monday. I love seeing a pop like this into earnings when I'm looking to short it. Baidu, at the end of the day, I picked up the February 130 put options. Okay, the 130 puts, these are the weeklies. They expire next Friday. I bought the February 130 puts. $3.40. If they don't come out before the open on Monday, which I don't think, I think they'll be after, but again, it's still not confirmed, you could take a look at those 130 puts. I like the 130 puts, the weekly options. I bought them at $3.40. Amazon, a stock that everybody loves to criticize me and tell me I'm crazy shorting. Amazon, today, I put on a put spread. Tuesday, after the close, earnings are coming out. I bought the 185 puts for $3.50. I sold the 170 puts, 75 cents. All in, $2.75. My upside is the $15 difference for better than a 440% return if Amazon sells off. If it doesn't and I'm wrong, I lose the $2.75 that I put into the trade. I know what my downside is, so I'm able to manage my risk. ARM Holdings, I'm getting a lot of emails about it because their earnings are coming Tuesday. Everybody's asking me, why it's not on the earnings playbook. I like ARM Holdings. I'd like to see it come in towards 27. If it does, I think you could take a shot at ARM Holdings, but this is one that's had, a phenomenal run back in the day. It's a tough one for earnings, but I do like ARM Holdings. I expect a good report. Earnings for the week of February 6th through the 10th, which, by the way, I'm at the World Money Show, the 9th through the 12th. I'm going to be there for 4 days, meeting and greeting, doing some little seminars and dog and pony shows. That week, the earnings that are on my radar that we're already involved in and that I love, SolarWinds continues to form a nice base. Network management software looks really, really strong. I like SolarWinds into their earnings. Any weakness in SolarWinds could be bought. Allot Communications, ALLT, is yet another one that I like into earnings. We have the June 12.5 calls. I'm looking at those as a stock replacement. I like the June 12.5 calls. I own them at $4.90. They're currently $4.55. I like ALLT into their earnings while I'm at the World Money Show. The retail restaurant stocks will be reporting that week. Panera Bread, PNRA. I really like them into their earnings report, but I want to see it come in a little bit. I'd like to see a shakeout down to 140. At 140, I'll take a shot at the 150 calls in Panera Bread. The other two restaurant stocks that we're already in both the stock and the option, Buffalo Wild Wings, we nailed this thing perfectly off the 200-day moving average, already have a nice profit, but Buffalo Wild Wings and BJ's Restaurant both look really good into their earnings reports the week of the World Expo, the World Money Show. Select Comfort, SCSS, is another one that's on our earnings calendar. I got an email about this. I like it into earnings, but we talked about this a week ago into the earnings. Now it's already extended. We just had a nice 10% move. I wouldn't go chasing it. If it pulls back towards 22, yes, you could play it, but if you're not in there already, I wouldn't buy Select Comfort on this extension. That doesn't mean I don't like it and think it could be $30 a share in another 2 weeks. I think you have to wait for a pullback towards the 22.5, 23 level on Select Comfort. Every time I mention Select Comfort, I have to mention Mattress Firm, which, for those of you who own it, I know a bunch of us own it because we bought it right after the IPO when this thing was bouncing around in here in the 22 range. But just sit back and enjoy the ride. We're up 50%. I'm looking at Mattress Firm as an institutional darling. There's nothing wrong with taking some off the table, but I would definitely hold on to some. Coinstar has earnings coming, in 2 weeks, not next week, the week after. I like it into their earnings. Higher One Holdings, ONE, which is a comprehensive suite of disbursement and payment solutions for higher education, sitting on its 200-day moving average, a nice tight trading pattern. Take a look at the upside calls in Higher One Holdings if they have them. I don't even know. I haven't looked at them to tell you the truth. But here's that. See, there's no options on it. So now playing earnings into playing a stock into earnings and buying the stock brings on another degree of risk. I am comfortable with Higher One Holdings. It's a name I own. I like it. I think you could do it. Just don't put a full position on into the earnings because you never know what's going to happen. They can always gap down, and if it does, you can always buy more. Beacon Roofing, BECN, rounds out my favorite earnings, that week in 2 weeks. Shifting gears now, looking at stocks under 10. DHX is one that has earnings next Thursday, back under 10. I like DHX into their earnings report next week. Kona Grill, another retail restaurant concept that we think has great long-term potential. Breaking out of this second stage base today. Volume was only average, but Kona Grill on any weakness back to 6, I think could be bought. We got a new stock under 10 that needs to be put on your radar. The name of the company, we mentioned it in the past, but new is in. We haven't mentioned it in the last few months. Hudson Technologies. This company's pollution control. They provide refrigerant reclamation, sales, decontamination to refrigerant wholesalers, contractors, and manufacturers. You got good revenue growth. You got strong earnings growth going forward. Earnings projected to increase 67% when last year's books are closed, 120% this year. The volume steadily increasing. Here's a stock that averages 55,000 shares a day, and it's been trading 500,000 shares a day for the last week. This stock is being accumulated. You don't chase it up here. You wait for a pullback. Let's see this thing come in towards the $2 level. At $2, $1.75, it's a no-brainer. At $2, I think you can get long Hudson Technologies. Make sure you have that on your radar. A couple other stocks, not under 10, but we're looking at American Railcar. We flagged it when it broke out. We said we don't chase it. Now it's pulled back towards its 50-day and is finding support on heavy volume. This stock is being accumulated. The company manufactures, repairs, and refurbishes, hopper and tank rail cars and other components used in the production of rail cars. This is a name we like. XRTX. Computer data storage, broke out. I need to see a pullback towards the 15 level, but that's one you need to have on your radar. Body Central, we had this one pegged on its pullback towards the 50-day. Remember the 50-day pullbacks? We said we like those pullbacks. Now we're breaking out. Body Central, heavy volume, 3 out of the last 4 days looks good. Stamps.com, STMP, electronic postage and U.S. Postal Services for individuals and businesses through their website, stamp.com, forming a nice second stage base here. Keep an eye on it. I think it might be poised for a nice solid move. The big news today and the big news next Wednesday, Facebook is going to file their paper for their IPO. So that brought a lot of attention into these recent IPO, internet plays, ones that, people like to compare to Facebook. LinkedIn, LNKD, broke out of a range. I think once the Facebook IPO comes out, you can actually look at LinkedIn as a short again. I think it's going to be overvalued. But LinkedIn, for now, there's some momentum coming into it. Zynga, ZNGA, also moving today. This is one that's rounding out a base back to its IPO price. This is one. So LinkedIn, no, I wouldn't buy it. Zynga is a company that's making money, computer software, gaming, rounded out a nice base, starting to work. There wasn't a lot of selling down here. I like the volume today. 14 million shares to the upside. There's some buying. Those are the footprints in the snow that we look for. I think Zynga, ZNG, is one you could take a look at and get long. I'd like to see you own it closer to 9.5. Close under 9, you get out. If you want to be a longer-term investor, use the $8 level as your stop-loss level, but $8 is a long way for 10, so you got to buy it on a pullback or half a position here. But Zynga is a name I really like. Zillow, the letter Z, here's one that also popping today. Has a nice little pop higher. I don't like it as much as Zynga, but again, IPO, it's been successful. It's been in a downtrend since the first day they came public. Oops, let me see if I can continue this. It's been in a downtrend, and now we're getting ready to emerge from it. So Zillow is online real estate data. They connect home buyers with sellers and mortgage professionals. That's one you can look at. The other big theme that I saw today was the Chinese tech stocks. The Chinese tech stocks caught a bid. They've been creeping up the last month or so, but today a lot of them broke out. Sina, Chinese internet portal, they're like a Yahoo in China. Sina broke out. Heavy volume to the upside. Sohu, SOHU, another gaming company, and they offer an internet portal. Heavy volume coming in, breaking out. Jobs, JOBS. These are all stocks that back 3 years ago I was accused of being nothing but a Chinese stock guy. That's where the money was being made. They've taken a long hiatus. China's been beaten up over the course of the last year, year and a half, and it might be time to start looking at these Chinese names again. Jobs, online and print recruitment services looking really good. TAOM, Taomi is a Chinese provider of online entertainment community for children. Built a nice long base. I mean, still under its IPO price was 9. This thing's been a failure from go. Up from its low of 4 to now 6, but any pullbacks in Taomi? That's one you could take a look at. It just depends on your risk profile and your tolerance. Renren is another social networker. They're like a Facebook of China. Okay, so Renren, look at the heavy volume. I mean, this is a stock that went 25% today. Look at the volume over the course of the last month. This heavy volume to the upside. 16 million shares today. Date, D-A-T-E, is another one, online dating platform in China. You know, not only recapturing its 50-day moving average and seeing heavy volume to the upside, but here is yet another stock that has firmly been in a downtrend. Today, we broke above it. China, at least for now, looks like it's back. Yoku, I'd rather see you. Now, you could buy any of these, I think. They all kind of trade in tandem. But Yoku is one that I'm looking at. I like Yoku, one of my favorite Chinese companies, you know, since they came public. QIHU is one that's got phenomenal revenue growth and earnings in front of it. They're a Chinese operator of software distribution websites. They also develop value-added services, antivirus software. They're the Symantec of China. Heavy volume, also downtrend, recently breaking out of it. If it gets above 20 and this 200-day moving average, QIHU I think is going to attain attention. I bought some QIHU today in the hedge fund. Okay, just wanted to share that with you. iSoft, ISS, you know, also popping, real good revenue and growth. Chinese provider of IT, consulting, maintenance, and other business outsourcing services. Volume wasn't as heavy as I would have liked and as heavy as some of the other ones, but iSoft is a name that I like. ChangeU, CYOU, they have earnings coming in 2 weeks while I'm at the World Money Show. Changyu.com, Chinese provider of free-to-play online gaming services for proprietary and licensed games. Moving up. Heavy volume coming into the stock. Changyu also looks really good. So it's hard to say which one is the best because they're all kind of going to work out. If you want larger cap, you go with the Sina, the Sohu. You know, if you're looking for my favorites, Changyu, QIHU, ISS, and probably Yoku, the Teomes, the Renrens, the Dates, those also will make you money. None of this bodes well, obviously, this running these Chinese tech plays. None of it bodes well for my Baidu short into their earnings, but I'm already short it, so I'm going to hold on and see what happens on Monday. That is it for the playbook. A lot of information tonight. You know, you got your list. It just depends on whether you're an investor or whether you're a trader. Are you short term? Are you longer term? You know, how do you want to set up for these earnings? You wait for the pullbacks, but you know, I could tell you what I'm looking at. I could tell you what I'm doing. It's up to you to formulate your own opinion of what you think the market's going to do. First and foremost, the most important thing is to see what you think the market's doing. When the market's going up every day, it's real easy to make money. And when it's going down every day, it's easy to make money. It's when it's choppy. That's when it gets difficult. We've been, you know, it's been firming up. I just think we're due for a pause. I think we're due for a little pullback. So just have that on your radar. All right, I think we could see a little shakeout over the course of the next couple of days to weeks. Wait for some of these Chinese stocks to pull in. Wait for the likes of, you know, the Body Central to come in. But the one name that I am really excited about over the course of the next 2 weeks, SolarWinds, is really looking good. I really think you need some exposure to this name. Have a good night. Have a great weekend, and I'll talk to you on Monday.